Hi everyone, let's go over my bullish and bearish low time frame and micro Elliott Wave scenarios on Bitcoin. Starting with the low time frame bullish scenario, where we're looking for a three-wave structure in an ABC or a WXY, where the low of the blue X or B is already finished right on top of the 886, for then a continuation to the upside to take at least the highs over here, the double top, and an interesting target area for wave Y is between the 1 and the 1.236, taken from the low to the high of this W, then to the low of this wave X, which is sitting between 27.6k and 28k. Now, because the low over here also touched the 0.9 Fibonacci, you also have to take into account the potential ABC, which is a 335 wave structure. So for this wave Y, we would be looking for a 3-wave move, but for a wave C, we would be looking for an impulsive structure to the upside, and potentially some targets might be higher. So if this box over here gets passed, the next area of interest would be the high over here at 28.3k. However, we also have a target box up here a little bit higher between 28.9k and 29.2k. The reason I don't have a potential impulsive structure in a 1, 2 and then a bigger 3 towards the upside is because price retraced all the way to the 886, taken from the low to the high of this A or W, and the 886 is more commonly a target for a B or an X than a wave 2. If we go to the bearish scenario, we're looking at a finished corrective structure in a WXY and now looking at an impulsive structure to the downside, where at least the first potential support area can be the yellow target box between 24.850 and 24.3k. And in this scenario, we're looking at this to be a wave 1, followed then by a 3-wave corrective structure in a wave 2, which could already be finished. We do have, of course, some resistance over here. Price is currently ranging around the golden pocket, which is one of the most common areas for the high of a potential wave 2, taken from the high to the low of 1. We also have the current monthly point of control of this month right at this level, which we got rejected by over here, as you can see as well. But just a little bit higher, we do have an interesting target box between 27.1k and 27.3k. So that could definitely be interesting for the high of a potential wave 2. It feels a little bit alternative at the moment, but this area is very, very important for either a downside, or if we can pass this, then the highs, in my opinion, are next. If we then go to the ranges, I first want to show you the bigger range, because this is actually quite interesting. And what we are looking at is a volume profile of this range over here. So the volume, we get insight into the volume, where first we rejected at the point of control of this range, the place where most volume has been traded, and then price came down to the value area low. Backtested the value area low, and if price can now push through the point of control and go above this high, it is actually quite likely we're going to reach the value area high at 27.4k. Of course, we have a little bit of like resistance in between the point of control and the value area high that we have to keep in mind, but from a probabilities perspective and statistics as well, it is quite likely you're going to then reach the value area high. But in my opinion, if price is going to reach the value area high and pass this target box, taking these highs over here is going to be very likely. So let's wait and see how this is going to develop. Preferably for a potential trading setup in a range, you like to see a move up, back test, and then the moment market structure is broken, that could then be a potential entry with a stop loss below. No financial advice. Keep in mind you have resistance over here as well. We then go to the micro time frames. We switch to the 15-minute, and I have 2 bearish ones and 1 bullish one for you. So the first bearish scenario is that this over here is a 3-wave structure in a zigzag. So a 5, 3, and then a 5-wave move to the upside, where after this first impulsive structure to the upside, this retracement went to the 0.382, which is more commonly for a wave B or a wave X, another wave 2. So that's why this being an A and then B part, like a BC, is a little bit of a higher probability, I suppose. So we have then a 3-wave structure in W, then a 3-wave corrective structure in wave X, and then we're looking for another zigzag structure, a 5-3-5 structure in then a wave Y. And you can see that the target area for wave Y is in confluence with the target box that we have up here between 27.1k and 27.3k. So that is actually very, very interesting, very nice. So in this scenario, we would be looking for another move towards the upside, then eventually have some resistance over here, and then eventually look for a little bit of a move to the downside, which can still be bullish, because in the bullish wave Y, right, this wave Y, we are looking for a three-wave structure to the upside. So even though this is a three-wave structure, that's absolutely fine. It can be a 3, 3, and then another 3, which is what you want to see in a potential wave Y. So if we then go to the second scenario, it basically means the high is already in. Now I'm between the two scenarios, I prefer this one over this one. And the main reason has to do with what I wrote over here. So if this is a WXY, so instead of this W being here, it now moved to the left, which also means that this X moved to the left. Instead of X being here, it now moved to the left. And what makes this an alternative for me is that this count over here now has to be a WXY in a 3, then this has to be a 3, and this has to be a 3. So it's on a WXY to the upside inside a W, and preferably in WXY scenarios, you want to see simple structures. So you want to see a zigzag, you want to see a flat, you want to see a triangle, which is only possible in the Y, by the way. But you would like to see simple corrective structures and not WXY structures. So that's something to keep in mind. Then we have this X, and then we have a very long Y, as you can see. Like this is then a zigzag in a Y, a 5, 3, 5 wave move, which works well, but in relation to the length of this W over here, if you can see, wave W relatively short compared to the time it took to develop wave Y, it's not that nice, right? So this is at the moment an alternative, but in this scenario, after hitting the golden pocket over here and of course the monthly point of control that we have, we would then be looking for downside, where I think an interesting target box that we have and some support to the downside is the one over here between 26.3k and 26.2k. And if we then go to the bullish scenario, we would be looking at a 1-2-1-2-1-2, which is incredibly bullish. So you really want to see volume pick up if price is going to push to the upside. Of course, we had a big peak over here, but you want to see this continuing in a 1-2-1-2-1-2, and this also at the moment is an alternative scenario for me, mainly because the 1-2-1-2 scenario is an expanding diagonal and not a converging diagonal. What I prefer to see is like wave 1 be a long, then you have a wave 2, then the second wave 1, second wave 2, which is creating a converging diagonal instead of what we're looking at over here, which is a diverging diagonal, as you can see. But in this scenario, you then have a 1, 2, another 1, 2, and then another 1, 2, where the first two basically retraced to the 0.382, which is a very shallow target for a wave 2. It's also a rare target for a wave 2. The second one retraced to the golden pocket, which is fine, and over here the third wave 2 retraced to the 0.5, which is a common target as well. So basically this one and this one, that's fine, but the first one is the issue with the 382, which is a rare target. It's still a target, but it is a rare target nonetheless. So in this scenario, you really want to see price pushing through this resistance without any problems, right? If this is going to be a wave 3, of even a bigger wave 3, this resistance should be peanuts. Now, one has to remember we are in the weekend, right? And usually the weekend is lower volume and you don't really tend to see big wave 3s in the weekend, but never say never, right? It's something that we have to keep in mind. And then finally, if we look at the CVD, we do have at the 1 hour, we still have that bullish CVD divergence between over here, higher low on price, lower low on the CVD, where the target are the highs over here at 27.7k. But locally, CVD can be quite confusing. And of course, you know, with indicators, sometimes you don't really know what's actually happening. So let's look locally. So locally, one might say, okay, we have bearish divergences, right? Lower high over here on price, but a higher high on the yellow CVD. And that is true. That would be a bearish divergence. However, if we then zoom out just a little bit, then what you can also see is over here, price making a higher low, while on the CVD, a lower low. And if I quickly show you this actually on my in Discord, I actually put this in Discord just now, where you can see over here higher low on price, but also at the same time a lower low on the CVD. So locally you might have some bearish CVD divergences over here, but then if you zoom out a little bit, you can see we have some bullish divergences, right? So it can be quite confusing. And even if you would zoom out to the 1 hour, just to make it even more confusing, where you'll be like, okay, so price is over here, we can see the yellow CVD line, right? And this yellow CVD line is above the CVD that we had over here in the range, which is this high. So now you would argue, okay, but hey, we have a lower high over here and here a higher high on the CVD. That's really weird, right? That's odd. However, I would always prefer the more local CVD divergences, so the ones over here, compared to the bigger one, right? So I want to see bullish divergences here, even though we have the big bullish ones, right, between the higher lows over here. I would prefer to see bullish divergences locally, which we already got, right? We already had bullish divergences over here, higher low in price, lower low on the yellow CVD, bullish divergences. That is what you want to see for then also potential more local trading setups. And over here, yeah, the most local divergence is the bearish one, lower high in price, higher high in CVD. But just don't forget, you know, as a content creator, I just have to say it, don't forget you also have this being still some bullishness, like higher low on price, but still the CVD in yellow is below, when this low was made, is below the CVD low that we had over here. So just keep that in the back of your mind and enjoy your weekend, of course, because yeah, I hope this video was helpful or valuable too. Please check out the most recent educational update I've done about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.